Hey everyone, it's Sumit. So it doesn't take a genius to say that the prices of things are basically rising and that we're living in inflationary times. It doesn't matter if it's the prices you pay at a grocery store, the price you're paying at a pump, the price you're paying for raw materials that are basically being used to create a finished good, or even the prices that are basically being paid to employees in the form of wages. Everything, for all intents and purposes, is on the rise. And in this video, I'm not going to spend a lot of time talking about whether inflation is transitory or not. There is a lot of other content on the internet that basically talks about that given fact pattern. But what I do want to talk about in this video is what asset classes should you potentially invest in such that you have an effective hedge against inflation. What are the three best asset classes more specifically that you should be investing in? And no, I'm not going to talk about gold in significant amount of detail, but before I answer this question, don't forget to smash that like button for the YouTube algorithm, subscribe to the channel, and ring that notification bell, and let's get into it. So when it comes to asset classes that you want to invest in during inflationary times, you want to invest in businesses or sectors that are relatively flexible when it comes to the price that they charge the end consumer, but are also able to keep their cost structure relatively low. So you want less capital intensive businesses for all intents and purposes. But perhaps the best inflation adjusted class from an investment returns perspective is that of real estate. What typically happens during inflationary times is real estate values do go up, and for that matter, rental values unfortunately go up as well. So an example of that is this, right? So when you have a builder that is basically building a new home, the costs of items that is basically used to build that home, whether it's lumber or copper or whatever, are generally high during inflationary times as well. So what happens is, since the costs of building that home are high, the prices charged to the consumer by the builder are also naturally going to be high. Now, with that said, you're also living in fairly low interest rate times when it comes to mortgage rates more specifically, and that creates a certain amount of inherent demand when it comes to real estate. So you have a confluence of activities that basically makes real estate a very compelling investment opportunity. Now, there are challenges associated with investing in real estate as well. Okay, some of those challenges include that it's relatively illiquid, so you can't get in and out of it. The other challenges associated with it is it does take sometimes a significant amount of investment to start out or get into this game in the first place. You also have to deal with property and maintenance, and you also may have to deal with some of the garbage, such as the eviction moratorium, if you're planning on utilizing that that investment property as a potential rental. So there are these challenges, and to offset some of these challenges, what you may want to consider investing in is something such as a REIT, or a real estate investment trust. And the benefit of a real estate investment trust is they also pay out relatively high dividends. The other asset or investment asset class that does relatively well during inflationary times is the stock market. But remember, we've talked about only those kinds of companies that do well are the ones that have some flex when it comes to the price that they charge the consumer, and of course are able to keep their cost structure relatively low. The one other thing when it comes to stocks is, like, these stocks are not all created equal, okay? So usually what is said is that growth stocks, they perhaps don't necessarily do as well during inflationary times because their future cash flows effectively needs to get discounted at a higher rate. Now, I know that's a bit of a mouthful, but the data does not necessarily support that. Growth stocks, for all intents and purposes, just like lots of other types of stocks, which I'll go into a little bit more detail here, have a tendency of outperforming the market during inflationary time. And when it comes to growth stocks, you want to focus on growth stocks that are very meaningful, right? And that have a significantly high growth rate. A lot of those companies, those big tech giants that have large, massive growth rates, 30%, 40%, 50%, those are the ones that will continue to do well irrespective of the environment that you're in. Now, if you're more of an ETF type of person and do not necessarily want to engage in individual stocks, there are various sides of the market that do very well during inflationary times. Now, in order of returns, emerging market stocks, cyclical stocks, small caps, and growth have all done historically very well. Now, if you do not want to deal with the headache of individual stocks or identifying ETFs, you can invest in something more of a blanket such as the S&P 500, which also does well during inflationary times because it is weighted down by some of those significantly large growth tech companies. But with that said, it does not necessarily generate the same amount of return as some of these individual ETFs that I've talked about just now. The other asset class that does very well during inflationary times is something called Treasury inflation protected securities. And these are basically instruments that are issued by the US government and are created for the sole purpose of combating inflation. And needless to say, they've done very well during inflationary periods. Now, if you want access to these tips, or how do you actually want to buy these Treasury inflation protected securities, the best way to go about doing so is just by clicking on www.treasurydirect.gov, for which I'll include a link to down below. Those are three asset classes that I've talked about: real estate, stock market, and tips. Now there's some other investment vehicles which a lot of folks do spend some time talking about, but I'm not essentially covering those as one of the top three investments that you would want to make. And here's the reasons why. Frequently you'll hear about oil being the master in this regard for all intents and purposes. They do very well during inflationary times. But when it comes to oil and its core, there's been a significant shift with more and more people focused on climate change and coming up with better or cleaner energy solutions, which makes this a more risky type of opportunity at this point in time. Other people also talk about gold, but the data does not necessarily show that, okay? The data just shows that in periods of significant uncertainty or a significant amount of inflation, gold does have a tendency of outperforming. But when it's more muted inflationary times, such as arguably the one that we're in now, it does not have a track record of outperforming the market. The other asset class that I've not spent a lot of time talking about is the crypto market, more specifically Bitcoin. Now this one is designed towards potentially being an inflationary hedge due to the finite amount of Bitcoin that is basically in existence. But with that said, the data is not showing at this point in time of cryptocurrencies and Bitcoin in particular being a suitable enough inflationary hedge. Lastly, there are certain asset classes which you want to stay the heck away from, okay? These are absolutely crap assets. One of them is bonds, okay? So bonds is absolutely ridiculous. They've even got a negative rate of return. You start investing in bonds right now, and if bond yields basically go up, the value of your investment is going to deteriorate rapidly. The other one that's also a crap asset for all intents and purposes is keeping your money in cash, whether it's in a CD, cash, savings account, whatever it might be. It is absolutely a waste of time because that return that you're generating from, say, a savings account or a CD is by no means going to outpace the amount of inflation. Heck, I don't like to keep money in cash even during non-inflationary periods. Anyway, hopefully you found some of the contents of this video to be informative in terms of the top three investment or asset classes you want to invest in during inflationary periods in real estate, the stock market, and in tips. If you did, don't forget to smash that like button for the YouTube algorithm, subscribe to the channel, ring that notification bell, and I'll of course see you in the next one.